The global financial community was stunned as breaking intel from Frank26 suggested that the Iraqi Dinar IQD has jumped to $5.66 per unit, while the Vietnamese Dong VND surged to $4.78. These shocking figures instantly triggered waves of speculation and excitement among currency holders worldwide. For years, IQD and VND investors held on to their notes, often facing skepticism and doubt. Many wondered if the revaluation RV would ever take place. Now, these reported rates hint at a historic financial reset that could validate years of patience. Markets responded quickly. Forums lit up with activity. Forex observers flagged sudden movements, and whispers of the RV is here spread across social platforms. For many, this wasn't just financial news, it was the moment they had been waiting for. To understand the shock, we must look at history. The IQD has long been pegged at artificially low values, trading at over 1,300 dinars per US dollar. A sudden flip to $5.66 would place Iraq among the strongest global currencies, rivaling the Kuwaiti dinar and far surpassing the euro or British pound. The Vietnamese Dong's leap to $4.78 is equally stunning. For decades, the VND traded at fractions of a cent, often dismissed as a speculative play. If true, this valuation would instantly reclassify Vietnam's economy, showing that its manufacturing strength and growing export markets were severely undervalued. In essence, these rates aren't just numbers, they signal a global economic shift, where undervalued currencies finally claim their rightful place. Frank26's latest updates spread like wildfire, because he has been a consistent figure in the revaluation community. Known for bold predictions and close ties to banking intel, his words carry weight among dinar and dong holders. Investors quickly divided into two camps. The believers, those who see this as the long-awaited confirmation of the RV. The skeptics, those who urge caution until official banking memos or government statements are released. Across YouTube streams, Telegram chats, and forums, excitement is mixed with nerves. Many investors are calculating their potential returns, while others worry about taxes, exchange logistics, and whether rates might fluctuate again. Frank26's role in this moment is crucial. Not just delivering intel, but energizing a community that has waited decades for change. When news like this surfaces, the immediate question investors ask is, are banks really ready? Over the past several months, whispers and insider reports have painted a fascinating picture of global banking institutions quietly preparing for a massive currency shift. According to leaks from financial insiders and currency community intel, large U.S. banks such as Wells Fargo, Chase, and Bank of America Long, with several international counterparts, have been engaged in behind-the-scenes preparations. System upgrades. Bank IT departments have reportedly been updating their Forex trading platforms, teller software, and digital systems to integrate potential new rates for IQD and VND. These updates aren't just cosmetic, they are critical to ensure that when new rates go live, transactions can be processed seamlessly without technical hiccups. Staff, training, and confidential briefings. Bank employees, especially in foreign exchange divisions, are rumored to have undergone confidential training sessions. These sessions included how to handle large currency exchanges securely, how to explain revaluation procedures to customers, what legal disclaimers must be shared before processing transactions. Some employees even hinted that managers were told to be ready for unusual volumes of customers without being given full details, fueling speculation that exchange windows were imminent. VIP appointments and testing, perhaps. The most intriguing reports are those of VIP level clients being contacted in advance. These individuals, often high-net-worth investors, corporate entities, or early currency adopters, allegedly received pre-scheduled appointments to test the exchange process. While unconfirmed, these claims suggest banks wanted to avoid chaos by rolling out exchanges in phases. Public rollout concerns, even if systems are ready, banks face a major challenge. The public rush. With millions of dinar and dong holders worldwide, banks could see overwhelming demand the moment rates are confirmed. That's why many speculate there will be a tiered rollout system. Contract rates or VIP clients go first. General public exchanges follow one system's are staggered scheduling, ensures order rather than mass crowds at branches. Why this matters? For investors, for everyday IQD or VND holders, banking readiness is everything. Without prepared institutions, even the highest revaluation rate would mean little. The fact that banks appear to be quietly aligning themselves suggests that the rumors of $5.66 IQD and $4.78 VND may not be far-fetched. This behind-the-scenes activity is a strong signal that the financial world, dismissing revaluation talk is preparing for it. If the reported rates of $5.66 for the Iraqi Dinar IQD and $4.78 for the Vietnamese Dong VND hold true, the implications for both nations' economies are nothing short of historic. These aren't just numbers. For currency traders, represent a potential economic reset for two countries that have long battled under inflation and external dependency. For decades, Iraq's economy has been heavily tied to oil exports with limited diversification. A revaluation of this magnitude would boost purchasing power. Iraqi citizens would suddenly find their money far more valuable. Goods, imports, and services could become more affordable. Attract foreign investment. A stronger dinar sends a signal of stability, encouraging global investors to pour capital into Iraq's rebuilding efforts. Energy, infrastructure, technology, and housing. Shift global oil contracts. Since oil is Iraq's biggest asset, contracts priced in dinar rather than dollars could redefine regional oil markets, strengthen national pride for ordinary Iraqis who have lived through war, sanctions, and economic instability. A powerful dinar could restore faith in their financial system. However, challenges remain. A sudden spike in currency value could disrupt exports as Iraqi goods may become more expensive internationally. Managing this balance will be critical. Vietnam's rise as a manufacturing hub has made it one of Asia's fastest-growing economies. Yet its currency, the Dong, has remained artificially weak. A revaluation to $4.78 would elevate Vietnam to a global player. Vietnam would instantly become one of the strongest economies in Southeast Asia, with a currency rivaling the most powerful in the world. Transform export dynamics. A stronger Dong could reduce Vietnam's price advantage in global manufacturing, but it could also push the nation to focus on innovation and avail industries rather than cheap labor. Attracts capital inflows. Foreign investors, reassured by a stable and valuable currency, could pour trillions into Vietnam's markets, boosting technology, education, and infrastructure. Improve citizen wealth. For Vietnamese citizens, savings and wages would suddenly stretch much further, increasing standards of living. Still, just like Iraq, Vietnam would need to carefully manage inflation, trade agreements, and foreign exchange reserves to maintain stability after such a dramatic shift. The combined revaluation of Iraq and Vietnam would not happen in isolation. It would send shockwaves through the global economy. Forex market volatility. Traders would see unprecedented swings in exchange rates, forcing recalculations of currency pair values worldwide. Pressure on other currencies. Nations with undervalued currencies, like Iran, Indonesia, or even Zimbabwe, may push for similar reevaluations. Geopolitical shifts. Both Iraq and Vietnam could gain stronger voices in international organizations like the IMF World Bank and In short, these rates would not just enrich investors, they could reach global economics and elevate Iraq and Vietnam to new levels of power and influence. The reported surge of the Iraqi dinar to $5.66 and the Vietnamese Dong to $4.78 is more than just a headline. It represents the culmination of years of speculation, patient waiting, and strategic planning by both investors and global financial institutions. For currency holders, this moment could mean life-changing wealth. A 25K IQD note, once worth little more than pocket change, might now represent over $140,000 USD. Similarly, those who held large bundles of Vietnamese Dong could find themselves with fortunes they never imagined possible. But while the potential for profit is staggering, the responsibility that comes with sudden wealth cannot be overstated. This is where planning, patience, and discipline will separate success stories from missed opportunities. For Iraq and Vietnam, the impact is historic. Iraq could finally shed its image as a war-torn economy and emerge as a regional financial powerhouse, powered by oil, wealth, and foreign investment. Vietnam, on the other hand, could shift from being a low-cost manufacturing hub to a nation recognized for economic strength and stability, rivaling larger Asian economies. Together, these countries may signal the beginning of a currency realignment that challenges the dominance of traditional financial powers. For the global community, this moment sparks important questions. Will other undervalued currencies follow suit? How will the IMF, World Bank, and central banks adapt to these sudden shifts? Could this mark the start of a global currency reset where values reflect true economic power instead of outdated peg systems? One thing is clear. The financial world is changing, and we are witnessing it unfold in real time. Final thoughts. The journey of the Iraqi Dinar and Vietnamese Dong has been long, filled with speculation, doubt, and hope. Now, with reports of these explosive rates, the dream of revaluation feels closer to reality than ever before. Investors must remain vigilant, stay informed, and approach this moment with both optimism and caution. The coming weeks may define not just the future of two currencies, but the balance of global economics itself. As Frank26 and other gurus have often said, this isn't just about money, it's about history in the making.